Good afternoon. You're watching Business World Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Wednesday. The rally among local shares showing no signs of abating just yet, although jumping at a more conservative rate today. The main index climbing close to 0.25% to 7,082.15. That's a pullback from gains made earlier today, as you can see in this chart right here. Shares even peaking, zooming past 7,150 earlier in the day, increasing by 1.3%. The PSEI, though, unable to sustain the rally, but still ended the day with yields here. Shares advancing ahead of expectations that the central bank in its monetary board meeting tomorrow will be keeping interest rates steady. That's amid a spike in inflation last month. That's been pretty much the result of a poll here from Business World as well as Reuters, also sparking some sense of optimism here. You have the Treasury copying 221.2 billion pesos via its three-year retail Treasury bonds. That's expected to finance the national budget as well. But let's zoom in on one specific sector here, taking a look at the property counter. One of the top winners today, the gauge is up 0.9%, as you can see right here. That's despite reports that our real estate prices might have a snail-paced recovery starting next year. Colliers reports prices and rents dropping by 13.2 and 7.8% respectively. That's only expected to inch up by 1.5 to 1.7% come next year, depending on investor sentiment and recovery in office space absorption. Looking at our main players here, you have a number of them ending the day in the green, together with the rest of the counter. Ayala Land is up 0.5%. Megaworld likewise also enjoying gains here. That edge higher by 0.5%. Robinson's Land also, as you can see, is in a positive territory. That is up 0.9%. And SM Prime increasing by 1.1%. But from real estate, we let's go to telcos here, with both giants here, PLDT and Globe, edging higher. As you can see, Globe, as represented by the yellow line right here, still managing to rise 1.9% to 2,038 apiece. That's despite 2020 revenue taking a 2% dive to 146.6 billion pesos, pulled largely by a 7% plunge in mobile revenue. On the upside, however, you have GCash usage growing fourfold, with 1 trillion pesos in transactions reported in 2020. They have earmarked 70 billion pesos in capex this year. That's higher by 16% than last year's spending plan. This is they beef up cell sites and their 5G and fiber rollout. Now, PLDT, on the other hand, edging higher here by 0.9%, is represented by this white line on the upper chart here. Price now at 1,380 a share. The telco giant and its wireless unit, Smart, had shelled out 2 billion pesos this year for cybersecurity initiatives. They will run a cybersecurity operations center that is meant to detect all types of threats, including online sexual abuse of children. And on that front, they've in fact already blocked some 3,000 domains. Again, both players in today's positive territory here. But their gains would actually seem minute compared to how Basic Energy fared today. The stock rose 12.3%. That even went up as much as 14% earlier today. This on the back of news that its wholly owned unit, Mabini Energy, has given the go signal for the principal terms of their wind service contract with the Energy Department. This is for a 50 megawatt project in Batangas. The firm also said that sale of its 67% stake will have financed future developments, including the wind power project in Mabini, Batangas. Basic Energy has so far soared, get this, 153% year to date. The Oil Explorer being one of the top gainers here, following a growing pack of retail investors cashing in on penny stocks. Basic Energy now at 13. Basic Energy, as you can see here, now priced at 1 pesos and 20 centavos a piece, but off to some more exciting news here. A possible IPO with Del Monte reconsidering its public offering plans. You have sources saying that the listing could potentially raise $500 million. Del Monte Pacific spokesperson said that the company is exploring its options. You have a number of people familiar with the matter also saying that they have already begun tapping banks. Now, should it push through, this is already its second attempt to going public after abandoning plans made back in 2018. Sources say the IPO may in fact happen by the second half of 2021. Now, here are other headlines we're keeping our eyes on. Business leaders in the country see infectious disease remaining a top risk in the next few years. A report by the World Economic Forum showed infectious disease joining extreme weather and climate action failure as top global risks for the first time. The report said ongoing pandemic threatens to scale back years of progress in reducing poverty and inequality. It also noted job losses, a widening digital divide, and disrupted social interactions as a result of COVID-19's impact. Here in the Philippines, business leaders cite the failure to effectively implement the vaccination program as risk to the business sector. Now, the national government, meanwhile, is looking to bring down its debt pile to 40% of GDP after it reached a 14-year high last year due to the pandemic. The Finance Department is now crafting a debt consolidation plan, which will be approved by the Development Budget Coordination Committee. The national government's debt stock hit 9.8 trillion pesos as of end 2020. This is equivalent to 54.5% of GDP, the highest level logged since 2006. Prior to the pandemic, the country's debt to GDP ratio has been on a steady decline with a record low ratio of 39.6% in 2019. The plan to lower debt stock to pre-pandemic levels won't likely take place anytime soon. The DBCC expects it to continue rising to hit 57% of GDP by year end, around 60% next year. Okay, for now, let's go and talk about one sector that had to quickly adopt after the pandemic hit in 2020 to talk about how they fared last year and their outlook, especially when it comes to the job market as well as the digital transformation. We have with us Jojo Uligan, the Senior Vice President of Alorica. Good afternoon, Jojo. Great that you could join us.
Hi, good afternoon. Thank you for having us.
So, Jojo, just to kick off our discussion here, let's start up with the job market here. Of course, somehow we're seeing unemployment easing, but still at elevated levels. In fact, you now have economic managers revising their employment targets for 2022. Question now is, how badly was the sector hit last year, especially by the weakening of the labor market?
For our industry, especially for Alorica, no one's prepared with the pandemic, right? When we got hit in March. So, and then we quickly adapted to shifting and pivot the way we work. So we've able to shift from a work at home. So again, we've implemented a lot of work on home for our folks for most of the programs that we've actually servicing out here in the Philippines. And for Alorica, in fact, ending 2020, we've actually recruited and hired about 30,000 folks. In fact, for Q4 alone in 2020, we've hired about close to 6,000 to be able to service the requirement of our clients. So I guess we're one of the sectors that's lucky and blessed that we are able to continue to service and able to offer jobs to Filipinos here in the Philippines. So for 2021 Q1, we're actually supposed to hire 6,000 folks in all different segments, from customer service, tech support, chat, email support, from servicing clients from retail, logistics, telcos, and others. So again, we're blessed that despite of this pandemic, we're able to continue to see growth in our sector, in our industry.
Okay, that 30,000 bump up in 2020 is no small feat there. Can you nuance us a bit here? in what particular sectors did you have that absorption from? Like, are we talking about sectors here, let's say OFWs, you have a number of them, of course, being
Right.
repatriated, or is it still majority fresh graduates here?
Actually, it's combination of a lot. So we in Alorica, we hire and partner with government in terms of hiring our returning OFW. So we have them working for different programs. We have also shifters from other industries, other sectors that's joining our industry for they need a job, they needed a shift because of the pandemic. So we welcome them, and of course we also recruit from fresh graduates. So it's a combination of a lot of this, especially for Q4, because it's a normal peak for our industry and for our company. And Q1 happens to be another peak for our company as well. And we're growing, and we are actually inviting our folks, OFWs, returning OFWs. Feel free to come join us. Shifters from other industries, other sectors, we welcome you. And of course, college graduates or new entrants in our industry, in our sector.
Okay, Jojo, what's interesting here as well, of course, the need for new employees is parallel as well with the growth when it comes to demand. So, what
Correct.
are the sectors here that have so far become the new drivers of growth for Alorica?
So new driver for growth for Alorica is, again, as the pandemic hit us, we shifted the way we do business, right? So we've implemented, and you mentioned earlier about digital transformation. We transformed the way we do business by leveraging on technology, AI, chatbot, in terms of offering our services to our clients, right? We have what we call Alorica Anywhere that helps us able to implement our work at home faster and more efficiently. So the growth sector that we're seeing that demands a lot of this work at home technology revolves in the areas of the retail, the logistics, and the delivery. The way the ordering, people order stuff, food, or services, or what have you. On the support sector, those people who have problems with their phones, with their laptops, with their computers, or even with their home appliances. We support them. We cater for them, and that's how through leveraging this technology available for us that we have developed with our partners, with our IT folks that we've come up. So we offer that to our clients, and immediately our clients welcome that changes and the new way of serving their customers, and then that's it. We are now growing and hiring massively.
Right. And now, can you give us an idea what the landscape is like right now for the BPO sector, and what is the outlook here for next year? How do we compare to the rest of the region here? Is the Philippines still primarily one of the major players here?
Yeah. So well, I'm also the president of the Contact Center Association of the Philippines. So we have a very optimistic outlook for 2021. In fact, when we did the survey, about 70% of our members are saying that they see growth for 2021. We're ranging from anywhere from flat to about 10%. Of course, depends on the size of the company, depends of the client that they service, and the geography that they service. They can see some upside, or they can just see flat. So we remain optimistic in the BPO space. We're seeing growth. In fact, even Everest said that there's so much opportunity even with the pandemic. Primarily, the question is only to ask ourselves is how fast we shift to that digital, way of servicing our client, and how fast we also upskill our agents. Or our people working in the BPO industry. There's still so much growth in the BPO industry, not just in the US, but also in other parts of the world, primarily driven by the pandemic. Other industries have really experienced massive growth because of the pandemic. Others, growth is flat. Others really, their volume went down. But net, we're seeing really a positive trend for our industry for the next 2 years for the
Okay.
Philippines.
So it seems that it's still going to be a rosy picture here for the sector come 2021. Thank you very much for your time with us this afternoon. Jojo Uligan, Senior Vice President of Alorica.
Thank you, Jess. Good afternoon.
And those are the biggest news this trading day, February 10, 2021. Catch Business World Live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News.